Welcome to Module 4, Pre-Opening Procurement and Vendor Management. This is Lesson 4.3, Vendor Management and 1099/Tax Compliance Documentation. Preparing a new hotel for opening requires the management team to onboard hundreds of completely new external vendors simultaneously. These partners cover a massive operational spectrum, ranging from suppliers of specialized operating equipment, or OS&E, to contractors installing complex IT systems. Operational teams often treat the collection of vendor documentation as routine data entry. The Director of Finance enforces these requirements as a strict financial protocol to protect the property assets before the doors open. This protocol ensures every external relationship established is legally sound and completely fiscally transparent. It also guarantees strict compliance with all local tax authority reporting requirements. During the pre-opening phase, this system is enforced by two primary architects, the Director of Finance and the Chief Accountant. They govern what is known as the Vendor Setup SOP. Their mandate is absolute. No purchase order can be issued and no payment can be processed until a vendor's file is 100% complete. This zero-tolerance approach functions as a rigid compliance firewall, effectively blocking financial leaks before a single dollar is ever spent. To see how a vendor reaches 100% completion, we use this compliance dashboard, breaking the framework into 4 modules. The first layer is the formal vendor application, securing baseline data, the vendor's verified legal entity name and primary contact information. Accepting informal operational names or doing business as monikers without verifying the underlying legal entity causes systemic reporting failures when it comes time to file annual tax documents. During this formal application phase, preliminary banking details are also submitted by the vendor. However, while these banking details are recorded now, they remain strictly dormant and unactivated until they pass a dedicated security protocol later in the process. The formal application is the bedrock of the file. It takes an unknown third party and translates them into a legally recognized accountable entity within the hotel's accounting system. Once the identity is established, the file advances to the second mandatory layer, tax compliance documents. Depending on the jurisdiction, this involves specific forms, like a W-9 for U.S. reporting, or a VAT certificate in Europe. The legal mechanism driving this requirement is straightforward. Hotels must report payments made to contractors to the government. This flowchart maps the mechanism. Payment data moves from the hotel to the contractor, triggering a reporting line to the tax authority. Without tax documentation, that link breaks and the expense is no longer deductible. Losing the ability to deduct a valid business expense artificially inflates the hotel's taxable income, which pulls cash directly out of the bottom line to cover the excess tax burden. Warning tone. Administrative oversights like these during pre-opening frequently mutate into massive legal disputes and audits with tax agencies long after the hotel is operational. Securing tax documents upfront immunizes the property against post-opening legal liabilities. The third requirement necessary to activate a vendor for payment is banking information and ACH authorization. The finance team must secure and verify precise routing and account details for electronic fund transfers. The primary persistent threat to this system is accounts payable fraud. In this common scam, fraudsters impersonate an existing vendor and submit a formal request to change the payment destination seamlessly to their own account. The Director of Finance mandates a countermeasure, a segregated process for verifying any change requests. Segregation of duties ensures that the individual who manually enters the banking data into the system is systematically blocked from being the person who approves its use for payment. Verified, mathematically locked banking details are the property's ultimate defense against pre-opening funds being siphoned by bad actors. With the defensive posture of vendor setup complete, the final module shifts to strategic liquidity through the Vendor Performance SOP. This specific standard operating procedure governs the formal negotiation and strict documentation of vendor credit terms. Standard examples of these negotiated terms include net 30 or net 45 days, dictating exactly when an invoice becomes due after receipt. Pre-opening cash flow management requires extreme precision because initial capital from ownership is finite and dispersed in scheduled segments. The ability to defer a vendor payment without incurring penalties directly preserves the hotel's immediate liquidity. This dual bar chart illustrates the direct inverse relationship at play. As successfully negotiated deferred payment terms stretch longer, the immediate need for funding drawdowns from ownership shrinks proportionally. Pushing payment obligations out safely allows the finance team to retain cash on hand longer, smoothing out the highly volatile pre-opening expenditure curve. Meticulous vendor vetting is a primary strategic lever for optimizing pre-opening liquidity. We have now constructed the complete four-part compliance protocol: formal application, tax compliance, segregated banking, and negotiated credit terms. The enforcement mechanism behind this structure is non-negotiable. Absolutely no purchase order is issued until this vendor file is structurally flawless. Following this exact protocol guarantees that the hotel's expenditure documentation is entirely audit-ready from the very first day of operation. These meticulous vetting protocols act as a permanent structural shield over the hotel's financial ecosystem. This rigorous zero-tolerance methodology is a core component of the advanced financial governance training pioneered at the Europe Hotel School London. Robust vendor files do them line and legal standing. Take a moment to review these compliance steps and prepare for the next operational module.